Mr. King, would you please call the roll, please?
Yes, sir.
For the State Treasurer, Mr. Moore. For the Director of Finance, Mr. Ortega. Mr. Lawson. Ms. Hendricks. Ms. Dillon. Mr. Rosensteel. For the State Superintendent of Public Instruction, Mr. Zaga. And for the State Controller, Mr. McGuire. Mr. Keeley, you have a quorum.
Thank you, Mr. King. Item number 1 on the agenda is the approval of the committee agenda and work plan. I'd entertain a motion to approve.
So moved.
Second.
Moved by Ms. Dillon, seconded by Mr. Rosensteel. All those in favor?
Aye.
Opposed? Okay. Item number 2, Chief Investment Officer's Report. Open session, Mr. Aylman. Nice to see you,
Good
Chris.
afternoon, everybody.
Hi,
Good
Chris.
afternoon.
Hi, Chris.
Good to see you. Hi. So, the teachers aren't back. They might be in the lunch area, but hopefully in the cafe they can see this. Assets right before Thanksgiving were 176.8. It looks like on an unreconciled basis we closed at 176.3 for the month of November. So on that chart you can see the blue bar is June 30, and then the purple one is where we were roughly in November, and that's pretty much accurate. So we have been up on the year, fiscal year to date already quite nicely, and you can see the asset allocation very similar to the positions we have been at for the last couple of months. This is the stock market through November 30 or November 25th, I believe. And I just got the final numbers on the month of October. The market was up 2.9%. It is up on calendar year 2013. It is up 30% on the Russell 3000 and up 29% in the S&P 500. For the last 12 months, what's remarkable is the market is up 31.7%. And as we pointed out many times, the average from 1926 to 2012, the average return of the market is about 9.8. So 3 times what we would normally expect in a period. And what's interesting in the last 12-month period in 2013, you're going to hear a lot of people, I think, when we get to January, talk about the fact that in the equity markets, size will matter. The larger stock, the smaller stocks have done the best. So small cap companies all the way down to what you would call micro cap companies have done very well. Both of those sectors are up 40. The smallest stocks are actually up 48% year to date, where the largest stocks are only up about 29%. So the mega big stocks are still up 30%. But as you went down the size range into the Russell 2000 and then even below that, you had even more return. Non-U.S. stocks are still going to have a good year. Year to date, the world is up about 20 to 25%, the best region being Japan. Emerging markets are the one area that's negative. Emerging markets so far year to date is only about a -1, almost -2%. So the U.S. will have done the best. Japan will have done the best, but the U.S. will do well. And what we'll see is a lot of talk about whether emerging markets is the place to invest or the place not to invest. And a lot of people will look at the BRIC nations. If you remember, the BRICS were considered to be, where GDP growth was going to come from and where equity returns were going to come from. So let's look at a comparison of past returns, because one of the things I wanted to look at was if you have a year where you're up 25, 30%, how has that happened? In the recent past, we've had a few years where that occurred. Sorry about that. There we go. In the recent past, we've had a few time periods, but often the year following a double-digit return like this is not a negative year, but it is a low positive return. So I don't want to forecast where the market will go in 2014. History would tell us that we could expect something in the 3 to 8% range at best. The market would run out of steam. The problem with history is we're in uncharted waters with interest rates being so low and the Federal Reserve being so accommodative. So as I've always said to you, don't fight the Fed. We'll have to see. I would not expect another up 30 year. That's very, very uncommon all the way back to the 1800s for the market to have double-digit years like that. But it would not be unusual for it to have a positive year next year.
Chris?
Yes.
When you look at those trends or past performances, do you also look at what price-to-earning ratios were, for example, in a following a year where price-to-earning ratios were 15 or 16% versus 25 or 26%? I don't expect you to have that off the top of your head, but it might be interesting to have that in the,
Well,
you
no,
know.
you're hitting right on the point, which is the valuation of the equity market. Normally, after a plus 30 year, the market would hit an overvalued range, and you'd see exactly on the point areas, you'd see price earnings ratios up in the high 20s all the way to 30s, and we're not at that point. Corporate earnings have been strong, and so the PE ratio is in a reasonable range of around 15 to 18. When you look at forward earnings, that's where part of the question comes from. Forward earnings, the earnings PE ratio is probably in the high teens to around 20. It could have PE expansion, but the key would be you'd be expecting people to be more enthusiastic and consumers to be more optimistic. And I think there's still just such a fundamental problem in the labor issue that it's hard to see that enthusiasm and that PE expansion coming through. But that's what would give us the next leg up if we had one. So spot on. The key events ahead for us when you look out in the future, we're obviously going to have the FOMC meet next week and transition from Big Ben as he goes off to Janet Yellen, our first woman leading the first largest central bank in the world. So that is a huge step. The beginning of the year, we'll get fourth quarter earnings, and then we'll get back into the rerun of last fall. We'll have the budget debate and the debt ceiling. There is still talk about some kind of a minor compromise to happen before December 31st. I'll leave that up to you as to whether you're optimistic Congress can get together. So looking out over the crow's nest to what are the risks out there, taper is still going to be an active discussion about whether the Fed's going to decline the taper or not. The debt ceiling. I would add to obviously that list of Egypt, North Korea, and Syria in the Middle East, but now we obviously have to focus in on, and I cannot pronounce the name of those very small islands that are off the coast of China. The Pacific Pension Institute, which we're part of and holds conferences, has brought these up several times, that these little spits of rock are often fought over between China, Japan, and other nations. And now with China's issue about the flight zone, it will be, and I think, Michael, it will land in your lap, as I saw. It's going to go to the International Council on Aviation in Montreal to really decide about airspace over those. But it is going to be a constant conflict. It's a source of, I guess, deep-seated national pride about who has territorial rights to those. It's hard to see them coming to any kind of a serious conflict over very small rocks. If you look on Google and you back it away so you can see China, these don't even show up on the map. They're so small. But it is an important, it'll be a conflict point, and I think it's going to stay pretty hot for a while. The other issues on there still remain. The big issue that's going in favor of the market is you don't fight the Fed. The easy money is keeping the economy moving along, as I've been telling you in the reports. But we're still seeing a big structural problem in the labor market with short-term jobs and a lack of long-term unemployed people getting jobs. And I think one of the things that's going to start adding to the risk list is the disparity in incomes. We saw some interesting charts from one of our real estate managers about the fact that since 2000, the top 20% have seen their incomes and their wealth grow. The remaining 80% of the population has not seen their income or their wealth grow during that time period. So that income disparity is very rare and reaching kind of a historic point. There's past history as it generally doesn't end well, but it's difficult to say where that's going to go in the future. So I think that's going to be a growing risk in our economy, but one that may be structural for a long period of time. Then last up, Jennifer Baker had asked me to kind of give an open session update on Cerberus. They own a gun manufacturer that we have talked about in the past. I'm going to give you more details still in closed session because that is still confidential investment transaction. But what I want to at least say to the teachers in public is that we have been meeting with Cerberus continually throughout the summer. They have been interested in selling this company. I met personally with them about a month ago in New York. I'm going to meet with them next week again in New York. We're very well aware that the anniversary of the Sandy Hook tragedy is coming up in mid-December. And I think, we'll certainly have our press team armed and our communications center armed in case we get phone calls. They have been very aggressive in trying to market that company. While I'm not pleased with the progress, we wish it had gone faster, and I know they do too. I'm still optimistic they're making the right decisions. They did hear back from a lot of their investors who are in the middle of the country, I'm going to say, pick on that area, but who feel differently about the Second Amendment and about gun rights. And so as they have seen, just like the national debate has seen, there's very strong views, but very split views on this issue. But they understand our point of view, and as I said, they made their own decision that it was time to liquidate the company and have continued marshaling their resources to do that. And we're going to stay right on top of them throughout that time period. So we will continue to be very engaged. With that, I'm open to any questions.
Any questions for Mr. Elman? Okay. Seeing none, thank you very much, Chris. Which brings us to the consent agenda, 3A, 3B, 4A, and 4B. Does anyone have a pull for any of those items? Any of the consent? Seeing none, I'd entertain a motion to approve the consent agenda items.
So moved.
It's been moved by Mr. Lawson. Is there a second?
Second.
Been by Ms. Dillon. All those in favor? Opposed? Okay, thank you very much. Item number 5 is a review of information requests. Are there any information requests for Mr. Elman or his staff? Okay, seeing none, thank you. Item 6 is a draft agenda for, it says January 10th. I believe that's a misprint, right, Chris?
February.
Okay, so it's February.
We do not need a January
We're not
meeting.
having a January meeting.
Okay, so any questions about the draft agenda? Okay, seeing none,